welcome back to Robinhood Stock Market Watch List. My name is Carlos, and today is Sunday, the 26th February 2023. This is a live meeting that we do every week. However, we also have a special guest here, David with Lo-Fi Trader. And so,
hey, how's it going, guys? Good. Hey, Carlos, awesome. Thank you so much for having me, guys. I do appreciate it.
Absolutely. I think it's always important that we always do this every weekend, as well as others to participate as much as possible, because as I've mentioned before, every pro trader specializes in something different, and it just makes a much more stronger group when we all just kind of come together. And so and this is an open meeting. Again, you guys, even though your mic might be muted, but just to kind of make sure that the meeting is quiet. But feel free to unmute. You can say anything you want anytime. You can also screen share if you want to bring something to the table here. This is a completely open meeting, but we always like to go over. First, we always like to go over the things that will have the biggest impact on the stock market first, going into the week ahead, as others like to talk about what happened prior and maybe what they've done. We always need to always have one step ahead of others, and one way to do that again is to really focus on the things that are going to have the biggest impact on the stock market. And again, that's going to be the economic reports, and then it's going to be earnings and other miscellaneous other events. And so let's take a look at the economic reports first. These are located at the investing.com website, but you can also use the application. It's a really neat free application, as we've utilized many other platforms for this material. Investing.com seems to be the one that's the most user friendly. And when it's easy to use, that's important, because we can easily navigate it efficiently. And so already have everything pulled up here, and it looks like it's pretty a busy week for economic reports, but nothing major. A lot of these have been populated in the last day or so, as the government's trying to figure out how to plan these events for the volatility, because as I mentioned before in the past, these are planned for precise reasons, for the morning volatility, and you'll notice that when you're looking at the times on the website, these are based on Eastern time zone, but if you're looking at on your mobile device, like your phone, it's automatically going to configure it to your time zone based on your location. So it's important that you know whether this is going to be released before the stock market opens or after the stock market opens. That way you can anticipate more volatility and a certain type of volatility, whether it may be bullish or bearish. So we'll take a look at Monday. So that's tomorrow, February 27th, 2023. We have two economic reports. We have now normally we only see economic reports on a Tuesday, Wednesday, and a Thursday. Very rarely do we ever see it on a Monday or Friday, but occasionally we may see one or the other. But it's interesting how the government just kind of spreaded it out. And so we have the core durable goods orders for the month over month for the month of January. If you don't know what it is, you can be sure to click on it, and it will display a paragraph that lets you know what it is and how it can affect the market. But this is telling us that this economic report is scheduled to be released 1 hour before the stock market opens. And typically, the first hour and the last hour of every day are the most volatile times of the day, because a lot of people are selling and they're buying, so there's just a lot of activity with that. But you'll also notice that 30 minutes after the stock market opens, there's a pending home sales report. And this could be huge, because pending home sales is both existing homes as well as new homes. And so we do know that the existing home sales have tremendously gone down, but the new home sales have gone up a little bit. But the existing home sales holds the majority. And so, but what we're seeing here is that the core durable goods orders for the month of January is forecast to be up a little more than the previous. Typically, this would be a good thing or a bullish thing because it helps, it helps the economy. But this could be one of those events where good news is bad news. Where really we are hoping that maybe with the government trying to increase interest rates and everything, trying to lower inflation, this isn't helping. And so this is where we can get that good news is bad news effect. And so, but then going into the pending home sales, with this being lower than the previous, this would normally be bad news. But again, this could be a type of bad news as good news. And so this is going to be very interesting. So this could be mixed results, where tomorrow morning, could open in the red at first, but then recover and maybe close in the green maybe. But let's take a closer look at Tuesday. Now, usually during power hour of every day, we'll typically see certain other type of government events that affect the entire stock market. And that's usually the president's schedule and the White House schedule, which there's a website for that. Oh my God.
Especially on an earnings gap up, I would really want to be a part of this trade. So definitely, this is definitely one to put on your watch list. And yeah, definitely, Carlos. I really like the way this is looking. Also, it is a slower mover, guys. So if you're looking for a longer term, slower moving account, Target only moves 2.4%. So this is something that you could dollar cost average into if you were playing in this area. If you wanted to play here, you still could do that, but I always respectfully wait till after earnings. So that's kind of what I'm seeing on there, Carlos.
Oh, good. Yeah, so next one would be Wendy's. Wendy's doesn't really make it on our, on the top 10 as often as it probably should, but it did this week as the media and other people will be kind of focusing on Wendy's. They're scheduled to release their earnings report on Wednesday, March 1st, before the stock market opens. The company's earning release has a 52% expecting an earnings beat, when option traders are pricing in around a 6% price movement, when normally it moves around 4%. But it's not going to be one of the big movers like some of these other ones. But one here with the Occidental Petroleum, or also known as Oxy, is confirmed to release their earnings on Monday, after the stock market opens. So this definitely allows us to be a little more prepared for this one as we get into Monday. However, energy is always a big thing during the fourth quarter or the first quarter of the or the winter season, ultimately, because energy is used more than it would during the spring or the summertime, because people heat their homes more than they would to cool their homes throughout the year, and so energy is greatly needed during that time. And so these are usually record-breaking profit times, or good revenue times for a lot of these energy stocks. So we have a 79% expecting an earnings beat, which is way beyond average. And so this is like, if we kind of turn that into like a different format, it would be like 4 out of 5 odds that this is going to go up, or beat its stock. However, option traders are pricing in around a 6% price movement in either direction, where normally it moves right around 3%. What do the graphs look like on this one?
Well, if we take a look at Occidental, I've been watching this thing ever since our good old Uncle Warren Buffett decided to invest big. And you guys can see where he got in. I do believe it was somewhere in this area. You can see that institutional ownership down here on the volume. Look at this guy. You can definitely see it's not somebody small coming in here buying all this up. So good old Uncle Warren Buffett was in here buying it up, and I've been watching it ever since. Now, this being a slow mover at 2.9% average daily range, we can see that this thing is testing this channel right here.
Yeah.
Now, we also know that the energy sector has been on fuego for the past couple of, I would say this past 6-7 months at least, right, or longer. And so if we look at this and we see this constant uptrend, it's not something I want to fight, but it's also not something I really want to turn a blind eye to. So this thing here is trading below that 200-day moving average. But if we get this sideways channel and a gap up on earnings, and we get anywhere above this, we might see bluer skies. Now, to have that type of earnings, that type of power would be pretty interesting. But on an earnings gap up, things can always they can always get really interesting or really screwy on you. So be careful when you're investing at these lows, guys, and please wait till after earnings before you react.
Yeah, that's an interesting pattern right there. As we see that the price has shot up at a certain point. It looks like it's kind of stayed there, but it looks like it could be gradually to go up. But it looks like, because right now, I mean, as this is the time ultimately, if we're following our cycle. Ultimately, this is the time to get rid of our energy stocks and should be putting them towards technology stocks. As we saw the economic cycle, which I'll tune it back on there really quick and show you something. That with the economic cycle, like when the stock market is at its top, which is usually towards the end of summer or sometime during the fall, that is the time to buy the energy stocks, and that's where we saw where the Oxy had came up from last fall. It did a great job. It made a lot of gains, and now it's just kind of hesitating right there. But it almost looks like with your chart, it looks like it's about to fall. So even if Oxy did say we beat our revenue, blah, 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 we could have a good news is bad news effect because the market... I
couldn't agree with you more, Carlos, especially trading under that 200-day moving average, breaking that trend line. Watch out below.
Yeah, so I would be very, very, careful on that one. Because I mean it does look very, very enticing, but the graphs look like that they're that they've had enough and it's ready for it to do what it's supposed to do, and which is coming down now. I mean, as we're entering the spring season, which is really right around the corner, that's where energy stocks are going to lose its growth and revenue and whatnot. And like I said, we've seen the crude oil inventory levels are up now. It wasn't like that before, so they're losing revenue by just keeping oil in the inventory levels. What they need to do is start lowering the gas prices more, and that'll encourage people to maybe drive more and spend money, and that helps the economy. But but for some reason they're keeping the gas prices up, and this is just
Can I go in my computer?
So did anybody have any questions? So let me see.
Don't be shy, ladies and gentlemen. This is your time right now. If you have any questions, whether it's on a technical pattern or just or anything that Carlos is going over, just go ahead and ask it now.
Hello, I have a question. My name is Mugda, and I'm just starting to invest in cryptocurrency. So for a day trading, which kind of coin should I look at?
Carlos, would you like me to take this one?
Well, we could do a little blend of things. So normally, it's when it comes to day trading and trying to be careful, it's always important to remember, always follow the money. And that means like, what are others day trading, kind of thing. And you'll notice that you can find certain information in different screeners or scanners and whatnot. But when it comes to the stock options world, when we're looking at the overall most active stock options, and this information is from last Friday, or the last trading day, which would normally be Tesla, Nvidia, Apple, Amazon, but these are usually the top, and you can tell by the options volume right here. But you may be able to find maybe less expensive ones like Ford Motor Company or other things. But the most favorable stocks that a lot of people like to trade is typically Apple, Tesla, and Amazon. What information do you have, Dave?
Well, I believe she was asking more into the realm of cryptocurrency, and I would always start, if you're a beginner trader and you're asking these kind of questions, definitely do your research on the companies and realize that cryptocurrency is a very, very risky business. Okay, and here we try to focus on the stock portion, but we do have places to talk to about in the cryptocurrency. But if I could give any piece of advice, I would definitely read into them and see what is backing those up, okay?
Okay, thank you.
Is there any other questions that anybody has that we can go over?
I do want to add something to the cryptocurrency. There's a website called coinmarketcap.com. This is a website you can go to see, if my browser doesn't crash, that we can check out the market cap for crypto stocks. Can you guys still hear me? Or am I crashed? I think I'm crashed. Damn it.
And you can see it build some sideways action, so we form good bases down here. And obviously, if you come out with good earnings, you can be a market leader. But right now, it's got a lot of proving to do because it's under this 200-day moving average, and we have earnings, and we need to get up above this base. So I'm bullish if it gets up above 40. So if we get a good expectancy or something happens or this thing can hold out and we start seeing this thing shape up, I like to see this buying. All this buying through here, this is some sell-off, but big buyers coming in right here in this area, okay? I can tell it, I can see it on the volume down here.
Yeah.
So if we can stand on the shoulders of those giants up in this 40 area, I would like to see some continuation. So we got some time on Rivian, but I'm excited for the stock.
Yeah, the charts look good. It's definitely nice and low. Looks like it's due to start coming up. Looks like it has some good potential there. Hopefully that we have some pretty good earnings, and that what we're actually seeing is maybe they set the bar pretty low. And they're going to do hopefully really good. I don't know if you guys seen any Rivians around, but there's a lot more of those driving around in metropolitan areas, and so they are selling a lot of them. They've been taking a lot of reservations. They're more accessible than it would be the Tesla Cybertruck as well as the Ford F-150 Lightning truck. And so if you're in the market for a electric pickup truck, the Rivian is typically a little bit more accessible than anything else. Next one is AMC. AMC is obviously going to make huge headlines this week. And even in the last week, we've just been seeing a lot of unusual activity. Even with the options activity here, we've seen AMC on the top lately, and so but we do see even with Friday's activity, almost 60% are puts and 40% are calls, and so AMC was down only about 0.5%, but I think it was up. It was quite up a lot last week, where it was right around I think $4 or $5. Now it's up to $6. But AMC is scheduled to release their earnings on Tuesday after the stock market closes. The company's earning release has a 52% expecting an earnings beat. So investors, they just don't know. This thing could go either way. But there's been a lot of great movies that have been out, like Avatar and many others, that have really provided the movie theater industry a great amount of revenue. Plus, it was about a week or two ago that was announced on the news that AMC was able to pay off $1 big chunk of their debt. And that's huge for investors. Investors like that. And that's the reason why AMC has been doing very, very well lately, is because they're paying their bills. And that's good for a company. Once they can get to debt free, now it's time to rock and roll and move forward. But because of this, option traders are pricing in around a 21% price movement in either direction, and most likely it could be in the upwards direction. Or what if the AMC was already pricing itself in at this, and now it's going to come down 20%? Dave, what do the graphs look like on AMC?
Well, I like how you talked AMC up like this success is about to happen soon, and then right at the end you just pulled the rug out from underneath us, guys. I love it. No, so obviously, guys, if you've been in the game at all, you know this has been a big eye opener for a lot of people. First of all, this moves 10.8% in a day. Okay, so then just keep in mind, if you are to trade AMC, it is a very volatile mover. It still is, well after that squeeze that happened a while back. So, guys, the first thing I see on this chart, obvious, it's under 200-day moving average, but it is shaping up here, creating new higher lows. Okay, and if you know the power behind AMC and its investors, the apes, if they're doing any time to actually get in, now I would say now would be the time. It's actually looking like the big boat is going to turn over. And I do have to mention, too, AMC finally did what all stocks should do, any business owner should do. They diluted their shareholders when it was up here. They did. They diluted their shareholders, but they used that money to pay their debt. So if they're paying their debt, and they might actually be around, guys. Theaters might actually be a thing, and it might get big and popular again, and I hope it does for the company. This down here, this base, is actually showing us a little hope. Okay, hope.
Oh, yeah.
But remember, that hopium, that wears off, so you need to be careful in these areas and under the 200-day moving average. The only thing that's going to be the real telltale is these earnings here, guys. So that's what I got on it, Carlos. That's just kind of a technical look.
Yeah.
But, you know, AMC, it's always got that nostalgic feel. So.
Well, it's also a manipulated stock, or what's the other word? So basically, when GameStop was greatly manipulated for specific reasons to pretty much save the stock and the company from filing for bankruptcy, but also to teach hedge fund companies a lesson, and then yada yada. But normally, when something like this happens, we see a lot of wannabe stocks. Same thing with cryptocurrency. With what happened with Dogecoin, several years ago, and it surged and everything. And, well, we saw a lot of wannabe cryptocurrencies. There was thousands of different ones that came out that wanted to be just like Dogecoin, and but only one made it through the cracks, and that was Shiba. Shiba's the next Dogecoin. AMC was the first one to kind of copy GameStop, and it was another stock that a lot of people wanted to pump up for financial gains, but also to kind of save the company a little bit during the pandemic, because nobody was going to the movie theaters. And so, but it's still, both GameStop and AMC are these hype stocks or manipulated stocks and stuff. But normally, certain investors have different rules and whatnot, and one of like my rules is just to avoid manipulated stocks. But if the volatility is right, we can always day trade it and everything. But it just has a lot of attention. There's just a lot of people that are focused on it, but we have a lot of bag holders too. People that bought a while ago. Maybe they're still in it. $20 a share or whatever. And so
I'm really happy you brought that up and mentioned that, because there is a lot of bag holders.
A lot.
And what he means by bag holders is all these supply zones that I try and draw up with these gray rectangles. I mean, there's enough to really stay away from this. So when Carlos brings that up and he talks about this, long-term investing, maybe not so much, but like he said, these are great moves for day traders. So it's good for your watch list. Keep it in mind, but be careful because it's very volatile.
Yeah. So next one is this one, which was actually kind of like a cherry on top. So normally we have 10 analysis for earnings, but this one was kind of an odd number, number 11, which is all this information that we get from the earnings whisper, which is very nice and detailed. But this stock ticker is NVTA, which is a pharmaceutical stock, and but it's some kind of medicine, which we'll have to look more into. But I'm not familiar with it, Dave. I don't know if you got a little bit more info on it, but it is expected to release their earnings on Tuesday, after the stock market closes. So there's something innovating going on here. We've never looked at this before. It's never been on our watch list before, but this company's release has an 88% expecting an earnings beat. That is extremely rare and very, very unique, because like I said, averages are usually around 65%. We may see, sometimes something in the 60%, or 70%, or maybe close to 80%, but 88, that's almost 90% expected. Like, they're like saying, no, this thing is for sure going to beat its earnings, and option traders are pricing in right around 32% price movement. Dave, what do the charts look like on NVTA? Does it look pretty low or high, or do you?
Yeah, Carlos. So NVTA, we had a quick chance to kind of scope this one out, you and I, yesterday, which was nice, because when something catches your interest and you can start doing some digging, you can start learning a lot more about the company, and then you can create the convictions around your trade. And I'll tell you this, what I'm going to tell you might sound kind of like skeptical, and that's okay, but you have to understand, I have proof in front of me to show you that these guys are ready. They are ready to dilute you as a shareholder for investing. So I'm not going to act like I know what to do with this information. All I can do is bring it to you, okay? But it's showing you right here that they have a prospectus supplement. Okay, they're trying to dilute their shareholders with $400 million. Okay, so that being said, guys, before you just take that and just shut this stock down, we have to understand, well, why? Why do these companies? Well, if you look at anything that's a therapeutical, biopharma, or anything like that, they have to use their shareholders' money to continue to invest and learn and grow, right? You can't make money out of thin air. Well, these guys kind of can. So what they're going to say is, hey, you let us borrow $400 million, we're going to sell into our shareholders, okay? So that could be good if they do like AMC does and pay off their debt, or actually use it into their cancer treatment programs that they have going. So if they have a supplement and this thing is due to fire up, and look, this is holding a nice base here, like all the way from back here. So it does, I can't lie, on the 200 coming down, it does look like it's primed. I don't trust it, so if it is primed and it does take off and it breaks these higher lows down here, then I will definitely be looking to take this for a day trade. And I'll hold it, but there's going to be definite risk and reward in mind before I do that. So be very careful, because yes, it does look primed. The news says it's primed, but this also has a very big group of bag holders right here, first off.
Yeah.
So keep that in mind, guys. I know Carlos is on the same page as me. We want to make sure our investors are safe. So yes, you can make money, but let's say you get in and you don't respect your stop loss, this thing could plummet to the ground. This also could rise up all the way up into this area, this $5 area too, and then get sold right off. So make sure you're taking profit. Make sure you know what your stop losses are, okay, guys? And that's more on a stock related. I know this channel, and you guys like to stick to options and do a lot of different investing strategies with your options. So just throwing my tidbits in there, Carlos. But yeah, take her away, brother.
Yeah, absolutely. And anytime when it comes to penny stocks, we always got to be very, very careful. There's always manipulation and other sneaky things that a lot of times these companies can do. But it just that's kind of the thing, though, is that there are certain clues that something is going to happen, and just like you said with one of your sayings, it's a cancer treatment drug, and so something innovating, something that they could have done that could greatly help their stock. I mean, they're priced very, very low. You can see them bouncing on their bottom. Well, whatever's going on and whatever that they've done may have greatly helped out, or maybe even paying debt. You know, whatever it is, investors are have this stock on their watch list, and so do we. And so, here's the schedule here that I post in our group, as well as our featured areas and throughout our chat rooms. So hopefully you've been able to save it to your computer or your device. But also, so that I post every Saturday morning, and then on Sunday morning. So just a few hours ago, I had posted the other bit of information for the earnings. Now, a lot of the earnings information here are very similar to what we've already went through, but there are a few others that are miscellaneous. Because a lot of times, like, even though we go over the top 10, this will probably pretty much have the top 20. So that way we kind of look at some of the other ones between 11 and 20. So, but kind of focusing on some of the ones that are more volatile. Let's take a look here. There's Silvergate. It says Silvergate says option trading volume is elevated due to an increased level of short interest. But they're saying that Silvergate, or it looks like SI is the ticker, is expected to move right around 19% by the end of the week. Take a look at some other ones here. You see, it looks like there's a big, so on Monday, so tomorrow, it says the Mobile World, I don't know if I can read it, Congress will take place in Barcelona during the week. So looks like there's going to be several stocks that are going to be affected by this. So this will be listed here for you. Plus, I will also post it in the chat rooms. I don't think I had a moment to do that yet. So Oxy, we did talk about that one, but then Zoom is also expected to release their earnings tomorrow, Monday, after the stock market closes. And Zoom was always a good, pandemic stock. When the government shut down the economy, and this Zoom greatly surged by a lot because it was greatly used. And ever since then, it's been a very volatile stock. So we do expect a price movement, right? Give or take, right around 13%. After the stock market closes on Monday. So that'll be a good one to also keep on our watch list. Let's take a look here. Sophie is on Tuesday. Looks like there's just elevated due to the company participating in a conference. And so Sophie looks like we're expecting around 7% price movement in either direction. What do the charts look like on Sophie, Dave?
So I don't know if it's Sophie or SoFi, but I might be pronouncing it wrong. I've been saying SoFi for a long time.
Could be, yeah.
Either way, it doesn't matter. As long as the stock is going to make us money, let's figure this out, right? So I actually played SoFi on this. Are we talking about the same stock? Because we already had earnings. Are we?
Yeah, no, that's the same one.
Okay, I did want to make sure. So guys, I actually did play this on my live stream. On the 5 minute when this thing opened up with this gap up, I took this trade, and I after I took this trade, we gapped way up here, guys, way up here, and this pullback is looking pretty constructive. It is looking pretty constructive. Do you have a question? Okay, so I do like SoFi. I like it for the long term. It's something I definitely would want to start dollar cost averaging into. And if this thing can just shape up in this area, trade sideways, maybe catch this 30-day moving average, and then head higher, I would like to get back into the stock so that way it can start making me some more money.
Oh, yeah.
Fucking asshole.
All right. It's not a good thing to say to Sophie there.
What's SoFi do to you?
Anyways, so we'll take a look at some other ones here. So we have some other big movers. Looks like it's Shutterstock. They're expecting about a 9% price movement in either direction. due to a company hosting an investor day, in which we're going to see a lot of these companies hosting investor days. And I think even Tesla is coming up pretty soon. In fact, did we see Tesla on here for this week? I know it's soon. I think here in a couple weeks or maybe 30 days. But we'll take a look at some other ones here. Let's see, some big movers. Now, Luminar Technologies was greatly affected not that long ago. Dave, pull up Laser, LAZR, because it says option trading is elevated due to the company's hosting a Luminar Day of 2023. So they will unveil its long-term product and technology roadmap for existing and new OEM customers. Shares have rallied after similar events in the past, but we are expecting a price movement right around 23%. So this is good, just like an Apple event where they reveal a new iPhone or Tesla reveals a new EV. Laser technology is actually very, very critical to autonomous vehicles. What it does, it's very similar to sonar technology. It shoots out a sound wave, it bounces back off an object, and it tells the computer system how far away that obstacle is based off of sound. But autonomous vehicles need more than that. They need more than cameras. They need more than just radar. So laser radar shoots little laser microdots at everything, and it's able to determine that there's an obstacle there and more of a depth perception. When you have autonomous and with this type of technology, it really prevents bad things from happening, like collisions and other things that we've seen with Tesla vehicles. People falling asleep behind the wheel and letting it drive and then smashing into a semi truck due to the sun glare or something. Elon Musk one day said, we don't need laser radar for our vehicles. Well, the ultimate reason why he said that is because he likes building, and this is a strategy of his, is that he likes building as many cars as possible. That way he can always break his records, record-breaking sales and deliveries. But the only way to do that is to build these cars with the least amount of parts. And so if you can build a vehicle with the least amount of parts, you can build it sooner and you can build it quicker and get it out to the customer. And so in his eyes, it's going to take longer to build each vehicle, and it's going to cost him more money to add that technology in there. So once laser technology becomes more affordable and it's cost effective, and maybe they got it working better, then we'll probably start seeing this technology implemented in all types of electric vehicles that are trying to perfect the autonomous technology. But yeah, Dave, what do the charts look like on laser?
I've been covering this for the past couple weeks now,
good.
And laser is a beautiful stock right now. It definitely has caught my interest. Now, you have to understand, we have this huge downtrend, okay? And it was trading under its 200-day moving average for a long time now. But what I see is a nice base forming up here. It broke these lows, came back up, and started trading in this base. Then, after it came back down, we see a very large amount of volume down here. This is huge volume here, guys. Huge overall volume compared to its overall trading of this stock, okay? So keep that in mind. We're now above this 200-day moving average, okay? We have some interesting story behind LAZR. If we can see this thing shape up and maybe start squatting like its range get really tight, I think laser might be something we want to keep on our watch list. But if we zoom into the hourly here, you can see where I was keeping an eye on laser. I was actually looking for a short-term downtrend in this, and we got it as a day trade. And it worked out nice because I painted the picture of where its supply was. This came up and it gapped up with that huge volume we were talking about out on the daily. And here it is right here in front of you. It gets sold off and then comes up to test it again and then eats right through it. So what I'm looking for, Laser, here, whether it's a day trade or if we're going to take a longer term swing, is I'd like to see it come back and test this area to prove that it is now demand. It is more of a demand area. So if you're looking for a swing and you want a dollar cost average, obviously know where your risks are, know where your stop out is. But if I'm looking for a day trade, I'm definitely going to want to look at back down here in this this $8 area to find a nice bid to carry on higher. Okay, that's what I see. I really like Laser.
Yeah, no, it looks good. Even the long-term view of it, it looks like the moving averages are getting ready to cross over in the upwards trending direction. So, that looks good. Right when it kind of clashes right nice there. Because not only are we seeing that, but the guys in Wall Street and everywhere else are seeing that. And that's their signal, all right, it's time to pump this baby up. And so,
absolutely.
And that's kind of what we're seeing.
It looks beautiful. Absolutely.
Yeah, no, that's perfect. All right, let's take a look at what is next. So let's take a look at here. Let me see. Okay, so this is a pharmaceutical. What do you call it? Rita. The ticker is RETA. It says option volume is elevated due to the company's announcing a 3-month extension of the review period for a new drug application for whatever that is for the treatment of whatever medical term that is, but it's also they pronounce it FDUFA, whatever that is. But we're expecting a price movement over 110% by the end of the 17th of next month, which is weird. So 110%, that is crazy. There's definitely this Rita. It's something we got to look more into. It's probably a penny stock. No? Do you have any? Let's take a look at some charts on Rita. Dave, if you can pull that up here really quick, let's take a look at that. Because this is very.
Yeah, Carlos, I have Rita up here. I pulled up when you first brought it up, and I'm looking at it now. Knowing right off the get, guys, I mean, you can see any pop that it's given, it's dropped, and it's only ever made new lower highs.
Yeah.
And as you know, biopharmaceutical companies like to dilute their shareholders, so you need to be careful with these stocks. It can move an average of 8.9% in one day. Now, if you're talking about a 100% move, we're talking this thing really needs to gap up. And if it gapped up all the way up into this area, like they say, which is the 150 area, if they're expecting this 100% move, then I can expect all of this area up here to be its supply to sell into it. So if we see that move, let's get excited about it, guys. But let's look to short the stock, right? But obviously, these aren't buy or sell recommendations. I'm just giving you my take, my opinion of where these things can lie.
Yeah, and it's not a penny stock either. So this is a good, stock that has its highs and lows and as well as the midpoints. And right now it's at the low point, and that's where we want to always buy low and sell high. But even if it does get back to its little midpoint there in the middle, that's a huge gain. And so
huge gain.
Yeah,
absolutely.
So this is going to be definitely one that's going to be staying on our watch list. And again, that is on a Tuesday. Is looking like when the event could take place, but that 110% is saying that it's going to be gradually for the next couple weeks. Continuing down, it looks like that we do have another earnings report here. The Coupang or whatever is expected to release their earnings after the stock market closes on Tuesday, but we are expecting about a 13% price movement on that one. But there was another volatile, I think it's another pharmaceutical stock down below, that Novavax. If you can pull that one, NVAX or NVAX, that is kind of a popular one. I think it's a penny stock, right? Yeah, it's always been right around $10, $9 or whatever. But I think $8.82 is pretty low. But it is expected to have its earnings release after the stock market closes on Tuesday. What do the charts look like to you, Dave?
Well, I did want to touch on Coupang, if you don't mind.
Oh, sure, yeah, yeah.
Really quick, just because I wanted to go over the fact that if we didn't see this part after the 12.9, if we don't see this, where the green line is, that is what I'm looking for a good ship shape. Okay, if this is what the chart looked like, and I would take this trade over and over again in a good market. When I took this trade, it was actually in a bad market, and that's why I have my stop losses, okay? We ended up getting out of this once it broke back down across this range. But here's the thing, guys. Coupang, if you know the story, it's very interesting. At these lows, I don't care, but if we are breaking different ranges, it might be a different story, but there's a lot of supply. But if we go to NVAX, and we look at this, it's well under the 200-day moving average, and I think it needs, for myself, a lot more time to show me some confluency. So give me some conviction here, and then we'll talk. So nothing on the charts here, Carlos.
Yeah, it just looks like it's just continuing the trend downwards is all. Yeah, nothing special there. But we are expecting to see some volatility. And you know, it could be, we just never know. But yeah, it is going to be on our watch list as we expect a 26 or around, 20% price movement in either direction. And so, and then, so the Tesla, I did see that the Tesla one here going into Wednesday. It does say that the Tesla option trading volume is elevated due to the company hosting its investor day. So we are expecting price movement right around 8 or maybe even 9% by the end of the week. And, and investors know this, and we could start seeing, a Tesla being pumped up as early as tomorrow as investors want to take advantage of this. Tesla's pretty low right now. It's right around $190 or so, but it was just right around it touched 215 just a few days ago or so, and so it's trying. It's just struggling for the last couple of weeks due to, a lot of stocks were as it's our normal algorithm. But like I said, we talked about earlier today about the the inflation reports and the interest rate decisions and things like that. All that is pretty much done now, and so now it's time for the market to kind of cool down a little bit and to continue to to start trending upwards. What do the graphs look like with Tesla currently, Dave?
Yeah, if we look at Tesla, it's looking like it's forming a nice high tight flag here. We do have to keep in mind it's right here bonking its head on this 200-day moving average. So there is some conflict, some issues here that I'm having. But if we look back, we can tell that this $200 average isn't just a psychological area, but it's also an area that it has used as resistance for a long time. Now that we have broken through that psychological and technical resistance area of $200 and pushed higher, we're pulling back and we're getting really tight on that $200 moving average, $200 psychological area. Now, I have a lot of marks here because I do a lot of trading around this $200 area for Tesla. When it breaks down, I short it. When it breaks through, I like to day trade, and take a long on it. And play inside these supply and demand areas. But Tesla, if we're looking at it for a long term, I believe in the stock, but I'm going to need a little bit more time for me to really pile my chips in and load the boat. I do see increased volatility down here at the base, which tells me we have some giants that are here. Do I think this is the low? I think we may have found the low in Tesla, but again, I don't have a crystal ball. I broke it the other day, so. We'll have to see how this shapes up, but I do like the looks of it.
Yeah, I do too. I just don't like the how it's kind of coming down. But I'm pretty sure all it's going to do is it's going to bounce off of those moving average lines and continue to go up. But typically, when you kind of see that kind of pattern, you start to kind of start worrying about, what if it continues to break through the moving average lines and it begins to trend downwards. But with our cycle and things and with what's scheduled, I just don't see that happening. I see how it's going to bounce off of that and it's going to continue to rise up, but to be determined, just like anything else. But Taking a look at the some more here. Let's see if there's any other really volatile ones. So there's another one here for Wednesday. I don't know how to pronounce that. Innoviz Technologies, INVZ. Looks like they are earnings before the stock market opens, but they are expecting a 15% price movement in either direction. So that would be a good one to kind of put on our watch list. Dollar Tree, another retail stock, just like Kohl's. Both of these guys are expected to release their earnings before the stock market opens, and expecting price movements anywhere between 8% to 11% with these retail stocks. Neo, we talked about Neo, but CRM or Salesforce is always another good one to kind of to look at, as Salesforce does periodically make it on our top 10 earnings, but it didn't this week because there were other ones that were more important. But CRM is still a very good high market cap stock, and it's good to look at some of the graphs on that. But we are expecting right around 7 to almost 8% price movement in either direction. What does the graphs look like on Salesforce, Dave?
So I've actually, this is my first time ever laying eyes on Salesforce, which is pretty cool. So when I'm looking at this thing, it's a big boat of a stock. Only moves 2.4% average daily. And I can see why people are getting a little excited here, because we're seeing a little bit higher volatility, some more volume coming into this area. And as it pushes up through its 200-day, it's coming back to test it, just like we're testing the SPY. And it looks like it's bounced off of its 200-day, now coming up with earnings on the 1st of next month. This might be shaping up for a move higher, but we'll only be able to tell. I do like where it's at, creating this low here. If this creates a new higher low somewhere in this area, even if it pulls back down here to this 140, 150 area, Carlos, I still think that this has an opportunity to shape up and head higher. So we'll see. This break above 200 is definitely a plus, but it's got some supply to deal with for right now.
Well, and with your long-term moving average it looks like it is now basically time to kind of inspire a lot of the long-term investors to start buying while it's this low. And it's been this low, it looks like for quite a while, since last May. And so it looks like it's time for it to continue trending upwards. Now that right before the bull market that we talked about earlier during this meeting. So that graph looks really good. It's exactly what we needed to see to kind of figure out where Salesforce is headed. Now, Micron, it looks like will also have some kind of activity this week, which is another semiconductor company. Option trading volume is elevated due to the companies participating in an annual technology conference. And so not expecting a lot of volatility from Micron, but right around 4.5% by the end of the week. But semiconductors are a very a popular thing when it comes to trading or investing, like stocks like Nvidia or AMD and as well as Micron or Taiwan Semiconductor. What do the charts look like on Micron?
Yeah, so Micron looks kind of like Salesforce in the sense of where it lands on this 200-day moving average. So it looks like it's shaping up here, and it's really trying to create that new lower high. As you can see, we formed a double bottom down here at this 48 area, and it bounced off very nicely and actually got through on some volume through that 200-day moving average. So just like Salesforce, it's starting to shape up around this 200-day moving average. I'd like to see this move sideways and start to curl up here as well with the 200-day moving average. So that way we can have these buyers down here behind us and helping push up this stock.
When we start to see a lot of these high market cap stocks do that, that's a good sign for the entire market. Because, like I said, when we see a lot of these, long term, buying signals, it really does get a lot of attention with Wall Street and other investors, and that's when we see that they want to take advantage of this opportunity. And so that's good when they're all kind of doing it at the same time. And so the next one is this Tupperware stock. I've never really heard it or maybe seen it, but the ticker is TUP. But it does say that there is earnings before the stock market opens, but we are expecting around a 27% price movement in either direction. And we're thinking Tupperware. We're going to take a look at the charts on this one. I don't think it looks probably promising as.
I tell you, I got a funny story on Tupperware, Carlos, but I'll make it quick. My mom used to sell this stuff. And it's just like anything, when your mom sells something, she's got to host parties, she's got to sell it on her own. So it was really beneficial for Tupperware to kind of use their product to go through two moms. And what it is, if you don't know what it is, it's an airtight lock steel container that now has been diluted by so many other companies making their own forms of Tupperware. But Tupperware was really the first time I ever seen something outside of, the glass bowls. These were different size tubs that you could label that were plastic. They all had their own lids. And moms loved it. They loved labeling and making everything look cool. I hated it. It was just another thing that we had to take out of a bag, to put in a box to rewash. But anyway, when I look at Tupperware on the technical side, aside from the jokes and the stories, it's been in a long-term downtrend. And we can tell when this thing breaks above that 200-day moving average, it looks like it tries to continue. But when it breaks below this 200-day moving average and wants to stay below it, it tries to stay below it. So we get these big, impactful moves higher on the 200, but it gets pulled off almost every time. So keep an eye out, guys. If we get a nice pop up through here, we might get a nice push. But keep in mind that it does look like there is some supply overhead. This stock has been around for a long time, and it looks like they've been in the downtrend for a long time.
For a long time, yeah. No, it just doesn't look good because, as you said, they just have a lot of competition. People easily go to Walmart or wherever, or their local grocery store, and easily buy them. When we used to be able to sell those. Just like a lot of other things in the past, like vacuum cleaners or knives and whatnot. But the whole door-to-door things or meetings, or especially after the pandemic, the whole hosting things and getting groups together has really declined since then, and so people just like being able to shop online more and doing certain things. So I just don't see where that can easily. Unless Tupperware comes out with something innovating, I can't imagine them moving upwards 27%, but maybe only downwards. But then again, this is saying by the 17th, so we do have several weeks for it to move that 27% in either direction. Next one is let's see, take a look at some other ones that may be pretty volatile. Let me see. Snowflake is one that usually gets a lot of attention as well, or Snow. This one also has earnings after the stock market closes on Wednesday. Looks like we are expecting a price movement right around 11%. What is your take on Snow when it comes to the charts? And
Sure. So it's sitting at $148.44 right now. It moves about 5.1% on a daily average, and it's playing right around this 200-day moving average. And guys, you're going to hear me say on a technical pattern these 200-day moving average because, like Carlos brought up, there is a lot of big boats that are hovering around this 200-day moving average, which is a big, tall tell that this is either going to be its pivotal direction. Will it go up? Will it go down? Again, we only can give you the sentiment, and you're going to have to be able to be the one that pulls the trigger. But when it's starting to curl, these big boats start to curl on these 200-day moving averages, it's definitely something that I want to keep an eye on.
Definitely. No, that looks good. Just another bit of clue to the rest of them that kind of all makes sense, and because we're all at that transition period. And that's kind of what, as we're getting closer to the springtime, that's what the spring is. It's that transition from going from the bear season to the bull season. But the transition sometimes can happen sooner or maybe a little later within that point in time. But that's a huge clue of where we're headed. So next one, let's go into Thursday. So looks like Six Flags is going to be releasing their earnings before the stock market opens. Six Flags is expected to move around 12% by the 17th of March. Though Six Flags, not sure how well they've been doing lately. What do the charts look like, Dave, for Six Flags? What have they been up to?
Sure. So I think we were talking about Norwegian Cruise Line before, and they're shaping up in almost the same way. We're finally getting some breath above this 200-day moving average. And if you guys notice back here, and I'm not saying all history repeats itself, but the last time this broke up above its 200-day moving average, it had a good move. We're talking the last time it broke up above its moving average, we're looking at 125% before it started to slip. Now, I'm not saying that can do the same thing, but what I can say is this 200-day moving average being another pivotal spot. You guys are going to hear me repeat it. You're going to hear Carlos saying it all the time. This looks like it's shaping up. So keep in mind, guys, 200 above, looking good. Yeah. 200 below, we might need to talk, okay? So keep that in mind. That's what I'm seeing, Carlos.
Yeah, no, that looks good. It kind of continues to add the the rest of our evidence to the uptrend. And so that looks good. Big Five, or BIG, is also expecting their earnings report before the stock market opens, but also we are expecting a 20% price movement within by the March 17th. And so just another retail stock that is probably struggling, I would imagine. What do the charts look like on that one? Probably pretty low.
Well, I'm glad I don't have to be doom and gloom on every stock. I'll start by saying the last two stocks I'd much rather have on my watch list. This thing is going to definitely need to show me some proof of concept over the 200-day moving average before I start talking about this. But I will say this, it's trading sideways for now, and it's trying to hold this base around $15. If it can do that and we can shape up on earnings, this big lot won't look so BAD.
Yeah. So, but Billy is also a very popular Chinese stock as well. We do occasionally see it on the activity screeners and everything, but they also have their earnings report before the stock market opens on Thursday. But we are expecting a price movement right around 14% by the end of this week. What do the charts look like on Billy?
I'm glad you brought up Billy. It's a fan favorite, at least in the communities that I'm around. A lot of people like trading this, and you can see why. It's very volatile. It's a very volatile stock, and that's always good for day traders, swing traders alike. Now, we can obviously see it's trading above and around this 200-day moving average, and with earnings coming up, it's going to be a pretty decisive moment, I feel, for this stock. If it doesn't look good for earnings, this thing might just head way lower, way lower. But where it's sitting at now, this might shape up. And if you guys see, I have a price alert set for this, and you can see why. The last time it was in this area where I have my price alert, it continued higher. And if we see the same pattern set up where we see a divot and then we see a handle, well, I like to trade cup and handles. And this right here looks one that is like it. So it's forming this handle, and if we can see it shape up and break out on high volume here, you're going to see me take this trade.
No, that looks good. Yeah, that's good. Kind of helps follow the majority of the other stocks, looking like that things are getting ready to come up. So some other ones, looks like Macy's is another one that is also expected to release their earnings before the stock market opens, expecting around a 10% price movement on that one, as well as Kroger. They are expected to release their earnings Thursday morning as well, with about a 5.5% price movement. Then we got Best Buy before opening as well, but with around a 7.9% price movement by the end of the week. So like I said, there's just going to be a lot of retail stocks, Nordstrom as well. Now Broadcom, which is AVGO, they are expected to release their earnings after the market closes. So they are a technology stock as well, expecting a price movement right around 4.5%, give or take, by the end of this week. And so what do the charts look like on Broadcom?
This is AVGO, right? Yeah, Broadcom. I see the sticker up top here. Carlos, I like the stock right away. What I'm seeing here is we're staying above this 200-day moving average, and with the overall market sentiment doing absolutely horrible in these areas, this thing is shaping up pretty well. Now, it's a slower mover at 2%, but we're above the 200-day moving average. We are into this supply area, but no fret. We're going to let this be what we can use to help identify whether or not this is going to continue higher. So if we can keep fighting and eating away this supply area, just like we've seen on laser right here, well, it's not going to want to show me, but just like we've seen on laser, where it might eat through this and we can push through on higher volume, well, I could definitely see this thing shaping up into a continuation even higher.
Yeah, that looks good. Just like you said, with all the turmoil, with a lot of stocks, most stocks were down. This stock's just slipped through the cracks and under the radar and continuing to maintain itself. So yeah,
when we see stocks hold up along these trends, when we see them holding up along the overall market being bearish, when things are pulling back, but stocks like this are trying to push higher, it's definitely something I want to keep on my watch list.
Definitely. Now, the next one is this AI stock. Pull up AI and let's take a look at that one. As AI, which is a huge thing lately with this artificial intelligence subject lately. Now, it wasn't that long ago where Google had plunged because their artificial intelligence provided a wrong answer to a question. And Google had suffered a lot because of that. But you know, there are other artificial intelligence stocks, and this one is another really important one. But with this earnings after close on Thursday, we are expecting a price movement right around 16% by the end of this week. What do the charts look like on AI?
Well, I got to start by saying, I've been following AI for the past couple of weeks now, ever since AI started to take off and become a buzzword. Because as you guys know, if you can find the right buzzwords and the right stocks that get extremely volatile, we can see huge price movements. And now with the price movement that it has had, its average daily range is still sitting at 14.9%. So if we're expecting an earnings movement, we'll probably get that earnings movement that it's calling for, okay? Because we're not too far from it on its average daily range. Now, you guys can see I've already formed this high tight pennant here. A lot of people consider this bullish, and I do as well. This is on the hourly. I'm zooming in on this. If we zoom out on the daily, you'll see my pennant looks a little different here. Okay. Now, I'm not looking at this on an earnings play. I'm looking at this on a pure spectacle hype play. People are all about this AI, and there is a ton of volume to back it up. Not to mention, I do like looking at volume price contraction, or volume contraction patterns, which is by Mark Minervini. And as this thing contracts, what it's doing is it's creating a range where it's getting really tight, where you have supply and demand fighting. Well, when one wins and the other loses, I think we both know, Carlos, this thing can really move. So whatever side you're on, guys, be careful and know where your stop is, because this thing can move. And I actually have a position now on this trade that I took during my live stream. This thing can really move, guys, but you need to have that risk. You need to be risk adverse when you're playing very volatile stocks like this. And by the way, Carlos, I absolutely love it squatting down on this 21-day moving average.
Yeah, no,
it looks
good.
Absolutely beautiful to me, but I don't want to get too biased. So do keep in mind, guys, that this is speculative. I did go over some of the fundamentals on it. It doesn't look like it's a huge revenue or earning winner, but you just keep in mind this is a very speculative stock. Okay, so.
Definitely, and it's definitely going to create a lot of attention. It's going to be all over the news this week, and that's why we like to go over this stuff. That way, we'll always kind of, figure out what's going to happen before it happens, and as well as what's going to, get a lot of attention. And this is definitely going to be one of them, as it has been, recently with the whole artificial intelligence subject. And so next one is ChargePoint. ChargePoint also has their earnings after the stock market closes on Thursday. We are expecting a price movement right around, give or take, 12%. And so, but our ChargePoint is one of those companies that builds these charging stations for electric vehicles. And as the government is investing more into the infrastructure, they definitely want to make sure that there's plenty of charging stations from coast to coast. They're going to start installing these in like the rest stops, on highways and freeways and whatnot, and get those going. But they're going to partner up with several different companies as well as ChargePoint to get these the hardware for it. And so as the government implements more and more deadlines, like for example, Hawaii implemented a deadline by 2035. All new vehicles sold in that state are required to be all electric. Well, the governor of California was like, that's a great idea, and so he implemented the same deadline by 2035. All brand new vehicles. Now, when I say all brand new vehicles, because they say it that way, it's really just cars and small SUVs and whatnot. They don't really mean like anything heavy duty like trucks and big SUVs like Expeditions or Navigators or whatever. And so, but it does mean all cars and crossover SUVs are now required to be all electric. Well, they got to go somewhere to someone to get the infrastructure in there. Now they've already are investing into 20 different battery companies or mining companies around the country to really start mining these battery materials locally. And so, but it's just one step at a time. But we're just a few years away, for a lot of this stuff from really taking off. Now, I'm in the state of Washington. I'm in the Seattle region, and our governor thought that this was a great idea too, but he wanted to implement this deadline much sooner than anyone else. And so he implemented this deadline to take effect by 2030, which we all thought that's not gonna happen. And well, they voted on it, last year, and it passed. So it's definitely going to happen. And again, they got to go somewhere to get these components for the infrastructure. There's a lot of people are wondering, where are they going to get the electricity for this? Who knows? But the state of Washington is always continuing to increase a lot of those wind generators and whatnot. So but we'll see what happens. But it's all in the works. And ChargePoint is a very critical stock when it comes to that. What do the charts look like on ChargePoint, Dave?
So right away, when I pull up ChargePoint, we see this downtrend. After its IPO, back here in 2019, we did have a lot of interest in those EVs when we came into the 2020, 2021, and this thing really took off. It was definitely a fan favorite for a long time, but you can see every new high is making a new higher low. So we have 1, 2, 3, 4, 5, 6 new higher lows. So for me, this is going to need a little bit of proving to do before I put my hard-earned money into this. Generally, when I see markets turn around, I'm going to try and look for a newer stock, or at least put this one on my watch list to see it shape up. Because if we look at all of the different charging stations, I would want to be in the leader rather than the lagger. So I haven't looked through this sector yet, but if it starts to shape up, I'm definitely going to pull up my EV and my charging point stocks, and we can look further, like Plug and maybe some of the other ones that we have on our list to see which one of these in this sector is going to shape up the best. But for right now, ChargePoint, it's going to sit on the back burner for me, Carlos.
Yeah, it may be premature, as you know, we're still many years away from this, getting implemented, but it is definitely scheduled to happen. And but you know, as it's bouncing on the bottoms, we can kind of figure out what that bottom is, and it's what, $6 or $8 or so, right around there, and so. Those may be good areas to buy on those bottom points, but as we get more closer into the or the bull season coming up in several months, it may leave that bottom, and so we may never see the stock price that low again for. Who knows? But if the market gets flooded with other companies with charging stations, that's not a good thing for these stocks as well. So, but it's still premature, it's still early, but to be determined. But it's definitely something to kind of keep a watch on. So next one looks like I've never heard of this one, the Samara or Samsara. The IoT. It looks like they also have earnings coming up Thursday after the stock market closes, but we're expecting a price movement right around 20% by the end of the 17th.
I'm liking the way this thing's shaping up here,
Let's
Carlos.
take a look.
It looks really nice. It's got this double top right here. It's trying to push into. But when you see an earnings gap up, and woo, baby, if you guys watch my streams, you'll know an earnings gap up like this gets me excited. Not only did it gap up on these earnings back here from, let's see, 11/30/22. Not only did it gap up, but it held these earnings too. It didn't give this gap back up, and then it pushed higher on this 200-day moving, above the 200-day moving average. So it's looking like it's shaping up nice. Now, if it had a constructive pullback, maybe caught one of these 10, 21, or 30-day moving averages, got tight to push up higher through that supply, I really like this stock. So IoT, I'm definitely going to add to my watch list, Carlos. Thanks for bringing that to my attention.
Yeah, no, that looks good. That's exactly what we needed to see. A nice, good.
Also, it's a 5% mover too. I like to see anything above 5% because that's really going to help small accounts move faster towards earning more money.
Yeah. So that looks good. And then Friday, very little activity there. There's just a couple different major, looks like events, MasterCard, it's not a very slow mover. Then we got Nike. Company announced on Friday or February 9th that its board of directors declared its next quarterly dividend. So it looks like Nike may be paying dividends. So there may be a good time to maybe buy some Nike if you wanted to get dividend. Because I think to get paid a dividend, I think you have to just hold the stock for like 2 days or something. I have to double check that, but it's not long. So it's like 2 days before the dividend pay date. As long as you're holding, you'll get paid that, and you can easily sell and move on or whatever. But that's going to create some volatility for Nike, which is NKE. And so, what do the charts look like for Nike?
Yeah, sure. I got to pull up here for you, Carlos. Nike is above the 200-day moving average, and it being the big boat of the stock that it is, this does look like a nice constructive pullback that it's had. Now finding a bid back to the 2020 lows, right? Yeah, 2020 lows. It's caught the bid here, and now is moving higher. It's looking constructive above its 200-day moving average, so if we can find a nice little catch somewhere here above the 200-day moving average, I would say probably just kind of taking a little technical guess here. If we look at this area, this looks like a nice demand area that we can try and defend if you were looking to try and dollar position cost average into Nike for it to carry higher. But always keep in mind, you need to know what your risk.
Definitely, and not only would you be holding on to something that could potentially be appreciating, but they're going to pay you a dividend just for holding the stock. So this is definitely going to be something that will be on the news and talked about throughout different applications and news sources and everything. And then the last one is the super. Whatever that is, super micro something or other, I'm not sure. SMCI option trading volume is elevated due to the companies participating on some payments and fintech innovations forum. but we are expecting some volatility with this, about 12% by the March 17th. So that one looks pretty interesting. We'll have to do some research on that. What do the graphs look like on that one?
I'm happy you brought up Supermicro. This is one of the number ones on my watch list for trying to dollar cost average in, or to try to find a really good spot to get in here. And I was actually a little grumpy about missing this one here. This was a beautiful area to try and get in as a breakout trade. Now, what I'm going to wait to do is actually see if this thing can pull back and give me a few tighter days around this 96 area before it breaks through the psychological $100 area. I do really like this stock. I do. It's looking so stinking strong in our market that has been pulling back for the last week or two. Look how strong this is. So if this doesn't get you excited, I don't know what will. This is definitely one of my number ones on my watch list. Traveling well above the 200-day moving average, and has fought that 200-day moving average really since 2018, Carlos. So I can't have anything bad to say except for we are a little extended, and I have to nitpick it. I have to. We are a little extended from this 10-day moving average, and I use that as my barometer of how I get my tight position sizes in. So again, I want to see it kind of fall back and get tight and show me, because it is traveling on this. It did break through, so I'm not, totally discerning, but it also it caught quick and pushed up high. So this I might need a couple more days on to try and get a good risk, but as long as the market shapes up, this is going to be on my number one list.
Oh, good. Yeah, that looks good. Throughout everything that's been going on the last couple of years, that thing is just non-stop skyrocketing.
Yeah, absolutely. And on the can slim method, like the William O'Neill's can slim method, the IBD investors, they really like this type of cup and handle as well. The William O'Neill cup and handle. You get this nice push higher, a nice base that's showing you that your investors are going to hold. And then when it makes it up to this top, it makes this little handle. And if we can get a couple more days, man, this is looking juicy.
Oh, good. No, yeah, that looks good. So going back to our group page here, we're investing.com always posts the top 5 things to watch in this week ahead. And so as we do our due diligence, it's always important that we always touch base on this. Okay, so top 5 things to watch in the markets ahead. Well, my computer glitches. Probably going to crash here. But number one on investing.com's radar is the U.S. data. The official data on Friday pointing to a strong rebound in consumer spending and accelerating inflation added to concerns over a no-landing economic scenario in which strong growth keeps inflation elevated and prompts for the Federal Reserve to keep rates higher for longer. And so that is what had provided us the bearish activity in the last couple weeks. But as long as we can kind of get past that, we can kind of start moving forward. Investors will get fresh insights into the strength of the economy this week with a raft of data due, including reports on the durable goods orders, the consumer confidence, and the home sales. The ISM manufacturing and service sector reports for February will be released on Wednesday and Friday, respectively. Tuesday's consumer confidence data may be of a particular interest, offering a glimpse into the household views of the economic prospects and inflation expectations. The economists are expecting an uptick to about 108.5 after the index unexpectedly fell in January. It's said to be a quiet week for the Fed speakers, with the main highlight being Governor Chris Waller's speech on the economic outlook on Thursday. So this is a clue here. So as we talked earlier today, when we're talking about the economic reports, it just looked like that there wasn't going to be any really major Fed speakers that could spook investors. So investors, I would anticipate that we're going to focus on, let's start pumping up the market this week. Even though I feel we're going to get a little bit of mixed signals from the economic reports, with a variety of good news is bad news is good news kind of effect. But as long as we don't have, or very minimal Fed speakers, it's time to rock and roll. But this is a clue that we do have a minor Fed speaker on Thursday giving us an economic outlook. So that's something and that's one of the reasons why we always want to double check the investing.com's the top 5 things to look ahead for this week. That way, in case there's something that we missed, we can add that to, because the pro traders always have this saying, lots of different sayings, but one of them is to always plan our trades and trade our plan. That way, we have an idea or a plan for this week. That way we're not going in blindly. Now, Benjamin Franklin used to say, if you fail to plan, you're planning to fail. And that's why we always do these meetings. So that way we can always get together and plan things. That way we don't go into the week unknowingly. And so number 2 says hard landing. After a strong performance in January, stocks have retreated this month as a raft of economic data fueled expectations that the Fed will need to push interest rates higher and keep them elevated for longer than previously seen. Wall Street's main indexes posted their biggest weekly drop of 2023 after sharp losses on Friday. But for the blue chip Dow Jones Industrial Average, the 3% fall was the biggest weekly decline since September. But the S&P 500 and the NASDAQ composite were down 2.7 and 3.3% respectively. And then we have this Cleveland Fed said on Friday that the Fed should raise interest rates higher than necessary if need to get the inflation fully under control. But if data in coming days indicates that the growth and inflation remain robust, equity and bond markets may turn lower still. But as I mentioned before, though, even though a lot of the Feds, they've been talking about this in the last week, a majority of them still favor increasing interest rates very mildly and still favor 0.25%, which still should provide us bullish characteristics. If they got more aggressive and was going to do 0.5%, I would anticipate that this should provide bearish characteristics. But now we know that the majority of the politicians are in favor of the 0.25%, so that's good for us to continue to recover the stock market. Number 3 says Eurozone inflation. That's going to provide some minor volatility with the stock market. Nothing that we need to really be too concerned about. The China data looks like Wednesday. This is also going to be minor too. But it looks like Wednesday the PMI data will give us investors insight into how China's economic reopening is faring, with the initial indications pointing to the rebound in the consumer activity during the lunar New Year holiday period. So, and then number 5, more retail earnings that we pretty much went over. So we got pretty much the main part of the of the top 5 here. Now, it's also important to always look at the stock options activity, whether we're into stock options or not. Again, it's still important to always follow the money. This is our radar. This is our graph that we kind of see what's going on with what. But when we're looking at this regularly, we know that Tesla, Amazon, and Apple, they're normally the top 3, and occasionally we'll have some other ones that mix in there, like some semiconductors like AMD or Nvidia, and some other maybe manipulated stocks like AMC. So it's nice to kind of see what's getting the attention, but also we can see a ratio between the calls and the puts. Normally we'll see a good blend of 50-50 or maybe 60-40. But as we go down the list, we can also see if there's anything that's unusual. Sometimes we may see like 90%. Well, so several days ago, as we were talking about the Luminar technologies, well, all of a sudden, Luminar, which was right in the middle of the list, which is not normally on this list at all, the Luminar technologies, but when we see something that's not normally on this list and all of a sudden it is, we got to consider that as unusual activity because now it's on our radar. And it had a call percentage ratio of 90%. Well, the next day, all of a sudden, laser or Luminar technology had surged like 20-30%. And then slightly back down. I mean, this is part of our radar that's very, very important that we always look at, and it does update regularly throughout the day. Usually every 15 minutes is when it updates the order, but the prices and percentage change every second. So this is a great area to view that information, as well as the options volume leaders. Kind of gives us an idea of what individual calls and puts are getting the most attention. But looking at this throughout the weekend, we can see that the DTE is yeah, I'm back. Sorry about that. Just having a lot of
brother, no
computer
problem.
glitches. I'll definitely get this resolved by our next meeting. But so yeah, going back to the options, I think I gotta share my screen here really quick. Let me get that going so that way you guys can see with the barchart.com with the most the most active individual calls and puts. Now when we're looking at this, we want to make sure that we are aware of the expiration date, and the DTE is basically the number of days until that option has expired. So when we're doing our due diligence throughout the weekend, we want to make sure we're avoiding those ones with the zeros and focus on the ones that are still currently active. So with the list here, the AMC with a $6 put is now the one with the most volume. And so so we have one AMC there, but there's a $3 AMC here. And so it looks like people are, they're kind of bearish on AMC right now. I mean, AMC is up there quite a bit. I understand where a lot of people are bearish now because they're just, they're trading off that algorithm. And so, but like I said, there's more volatility to come with AMC as we have talked about. And so we could see this activity change as we go into Monday. But then Tesla, we have a Tesla call here for $200, but usually we'll see maybe a few more. So there's a Tesla $200 there. Then we have a $95 put, $200 put, and then there's a $220 call. So Tesla shows a kind of a good 50-50 blend of both calls and puts going through the weekend, and so far we haven't seen any major, I would say, weekend news that would provide catastrophic effects on the market going into Monday. There's no spy balloons. There's nothing major. It just seems to be kind of chill. So Friday, the other day, that was the Russia's anniversary of invading Ukraine. I mean, Putin had a big old what do you call it, a rally cry or whatever on Monday. Kind of giving their little speech or hoorah or whatever, and but nothing really took place after that. Nothing has really happened. We haven't heard of anything. So that kind of takes that uncertainty away now, and so now the market should be able to resume kind of where it left off before all of this stuff in the last couple weeks. So it's just it just seems like this week I just have a strong feeling we should see more bullish characteristics than bearish. But people that like to straddle, though, they don't like to take chances, because straddling, it's a huge thing, because again, you can only lose what you have on one side, but your gains on the other side are always potentially unlimited. And so next one is Luminar Technologies, which has been a kind of an interesting subject throughout our meeting today. LAZR is the ticker, which is currently at $8.35. But we have two strike prices here, actually three. We have four right down here. But out of the four, three of them are calls, one of them is a put. So that means that the call and put ratio on this is basically 75% is calls, betting it's going to go up, and 25% betting it's going to go down, but most likely it's for an insurance purposes. But with the strike prices that we're seeing, even though Luminar Technologies at $8.35, we do see an $8 call strike price. This one's already in the money, but we have a $12 strike price right here. And so, but even if you don't or want to be in the stock options, this is still very valuable information, because to help always follow the money, you can see that investors are betting that Luminar Technologies could reach $12. And if your cost is at $8 and it gets to $12, that could be a 50% gain. And so and just by holding shares in a very short period of time, within 56 days or middle of April. But it may not stop there. It can easily keep going up, because by this time we have entered the bull market. And so but you can also notice this too, the open interest, which was really nothing prior from Friday. We have 209 open interest, and now all of a sudden Friday's volume had 50,000. That is huge. That is very unusual. Now, if you're new to options, open interest is basically the total number of open contracts that have been traded but not yet liquidated via offsetting trades, meaning people bought this before Friday, and they're well, basically open interest means that how many basically people are holding prior from that current day. But since the volume exceeds over the open interest, this is now showing an unusual amount of buying activity there, versus if it was the other way around, like for like this one right here. This laser has a $9.50 call strike price, but we see that the open interest was 102,000, but the volume is 41,000. We don't know if that's selling activity. I mean, it's probably a blend of both buying and selling activity, but it could be all selling activity. Maybe they're dumping this and buying the $12 strike price. But when we see that the volume has greatly exceeded the open interest, that is a tremendous amount of unusual buying activity. They're like almost certain that laser technology is going to get there. And with Dave and I looking at the graphs, it very well could easily get there, because it's just now it's just now taking off. We're right in that beginning of a perfect time of the year when we can start buying low on the technology stocks, as we looked at our stock market and the economy cycle. We're right there at that great sweet spot where we should be buying technology stocks here now and within the last month or two. And so this is going, I think this is going to continue to provide more activity this week, as we looked at this week ahead with a lot of these events. It's just going to keep going. So definitely make sure that Luminar Technologies is on your watch list. Some other ones that we're seeing here is the Mara. They are currently at $6.67, but we have a $20 call strike price. And again, if you're not buying stocks, that's fine. You buy it as a share. If it gets from $6 to $20, you just gain 200%. And especially if it gets to this within 112 days by not May, but June 16th. That's huge. I mean, that's a win-win. Open interest is 44,000. Volume is 41. I wish it was more. But we got to look more into that and kind of see, what other kind of activity we can see from that. But looking at some other ones, again, AMC, $3 put. AMC is going to be very, very volatile going into this week, so it's going to be kind of a roller coaster. Tesla, kind of looked into that. American Airlines, which is currently at $15.56 a share, but we have a $14 put strike price. So obviously investors are bearish on American Airlines because we see that the open interest was just under 8,000, and now we see a lot of new interest of 31,000 in volume. Now, if you're more of a long-term investor or short-term investor and you don't have time to really day trade or swing trade, that's no problem. Let's update this page by clicking on open interest, refresh it, and now it'll refresh the whole entire system by all the individual calls and puts sorted out by the highest open interest. And what you'll notice is that we'll see a much longer expiration date. And so, because maybe we're seeing something that's fairly new, some new activity or whatnot, but this is major because again, open interest is showing what people are holding on to. And so we see a lot of AMCs, mostly puts, it looks like, on the top at least, but we do see a couple calls here. So I think we're seeing a lot of straddling activity with AMC overall. But then we see American Airlines right here with a $5 put that expires in 2 years from now. And so it's not looking good for American Airlines with this amount of people holding on to. So, and then we have Tiva. Tiva has always been around $10, but we have a $9 put. But for some reason, we see a lot of people holding on to it. It is kind of a short-term thing. It looks like it should be. A lot of people are betting it's going to come down between now and the middle of June. Taking a look at some other ones. Uber. Looks like Uber has a $27.50 put. Doesn't look good for Uber. Dave, did you want to pull any of these up? Any of these on your charts?
Sure, give me one second.
Uber, we can take a look at that and try to figure out why. Are these really high and people are betting against them because they're up there, or maybe because it's based on news, or maybe their next earnings could potentially be terrible.
So can you give me Uber's ticker symbol, please?
Uber is just a UBER.
Okay. If we take a look at Uber here and we zoom out on the daily chart, we can see it's had this nice uptick. It looked like a nice sell-off here too in volume. That's a bad sign. But I will say this: when it curls, this 200-day moving average starts to curl, and we get a big consolidation period right here. Look at this. Earnings gap up. It held almost all of its gap. It came down and reset, but it made new higher lows here, guys, and that's what you want to see. When you see new higher lows and you see the 200 start to curl, things are looking a lot better.
So it could potentially be maybe people are selling their puts. Maybe they're no longer. Maybe they're trying to slowly get out of those positions, and because you can see that. Yeah, Uber is up there at $33.40 with the 27.50. We only have 8,000 in volume, but we'd have to see if it's taking it off of the open interest or is it adding to the open interest. So that's where because open interest updates basically every day, so we have to see what that looks like going into Monday, where volume resets itself daily back to zero and starts over, is always the current day's buying and selling activities. So we'll have to kind of see if people are getting rid of their puts, because it looked like with the charts that Uber should kind of continue to trend upwards, especially within the a long period of time. But this put though it looks like it's set to expire this coming March the 17th, which also reminds me to about something we'll get into here in just a moment. But going down the list with some other things here, let's take a look and see if there's anything else that's a pretty big gap. With AMC, there's a $15 call. So if AMC goes from $6 to $15, there's another good gainer right there just from holding shares, but again, that's another manipulated stock. Keep going down here. We see ACB. That's interesting. ACB is a cannabis stock, I believe. It's Aurora Cannabis, which is currently under $1. And cannabis stocks have been struggling for quite a while, but it's interesting to see it on our radar now. But we have a $5 call strike price. So the cannabis industry is probably going to be very interesting or very new for a lot of you guys. But if you guys have been trading around as long as we have, you would have experienced what happened many years ago with Canada. Now, cannabis or marijuana has been illegal for a long time, up until not that long ago. It became legalized in Colorado, and well, actually it was legalized in throughout other places in Europe, but then Colorado, and it has a chain reaction. And so my state of Washington became the second state to legalize recreational cannabis, and then it kind of keeps going. Well, Canada wanted to just legalize it from coast to coast, and so they started talking about it, and they voted on it, and it passed. But when you vote on something like this in the middle of the year, it doesn't take effect until the next following year. So by the time they passed it, the cannabis stocks was a new thing for everybody. We didn't know what was going to happen. We didn't know if it was a long-term thing or a short-term thing, but we still traded it. And a lot of these cannabis stocks came in as like a penny stock, $3, $5. But once Canada passed and said, "Oh, we're going to legalize it next year," these things were pumped up like crazy, and so they went from $5 to $50 to $100 up to $150. But and we made a lot of gains doing this. But once Canada legalized it, the cannabis market flooded itself, meaning there was a lot of farmers, there was a lot of growers, there was a lot of stores. They weren't able to profit anymore before it was legalized. And so when the market's flooded like that, the stock values lose their ether, their momentum, and they started to plunge right back down to penny stocks. Well, so I think a year or two ago, Mexico just legalized it without voting. They're like, it's legal now or whatever. So now the United States is basically sandwiched in between two countries that have legalized recreational cannabis. Now, the United States, this is inevitable. It will happen with the United States in two ways. Either we're going to vote on it, and it'll happen that way, and which we've tried to vote on it before, and it passes through one segment, but it doesn't pass through the other segment. But eventually, they're going to give in, and they'll either say yes, or once a certain amount of states within the United States legalizes recreational cannabis, then it becomes automatic that the rest of the country will be legalized. So it will happen. It's inevitable that it will happen. It's just a matter of when. But is this a clue that it's going to happen within the next 2 years? I mean, the election season is coming up soon. What if they start using that? If you vote for me, we'll legalize recreational cannabis from coast to coast, blah, blah, blah. But this is crazy. I mean, we see ABC under $1. It reaches to $5. That's a 500% gain. But not only is ABC gonna skyrocket, but we have other cannabis stocks that are also going to do the same. So there's a lot of these cannabis stocks we need to kind of keep in a certain part of our watch list, just in case when this does happen, that we are ready to take advantage of the opportunity, because this is going to happen. I promise you. It depends on which one of these scenarios that it's going to happen and when. But I believe it should take place within the next few years or so. And when we start seeing this type of unusual activity, where people are starting to buy stocks way down the road, but with huge strike prices, that gives us some clues that that this could happen pretty soon. So hopefully that makes sense. Anybody have any questions or anything you guys wanted to go over? One thing I did want to remind you guys too, going into March, is that that Triple Witching Day is also right around the corner. Triple Witching Day is going to be on March Friday the 17th, which only takes place 4 times a year. It's a very rare event, but it's like a trifecta event where a lot of things expire, and it kind of forces investors to sell and to reposition, or reposition at all. Maybe they just sell, but it's a very bearish day and time, but it's something that we can expect and to take advantage of, because if it's going to be a very bearish day, then we can buy a lot of puts the day before and take advantage of it. But also to remind you that quantitative tightening is still in a great effect, as you are probably aware of its major effects last week. As I had mentioned before, that on Thursday the government had scheduled to sell $14.5 billion worth of stocks. That's just trimming fat right off the stock market, creates a massive amount of red day. So this number provides us kind of a certain level of bearish characteristics. But for example, going into Tuesday, because these are scheduled to happen twice a week. But this Tuesday, February 28th, the government is scheduled to sell about $2.9 billion worth of stocks, which could provide a mild bearish effect, or really none at all. If other investors are dumping that same amount of money right back into the market, we may see a little bit of volatility, but the day could still potentially end in the green. But when you have something like this, on Thursday the 2nd, when the government has planned to sell about $11.9 billion worth of stocks, that's much harder to recover off of. But what you'll see as we get closer throughout the rest of the year, these numbers will begin to get lower and lower, which will provide a lot less bearish effect on the stock market, and is much easier to recover by other investors and hedge fund companies dumping that money right back into the market. But there are other days, later on this year where we'll see more bigger dumps. But later on, as we get more into the summer season, we'll see that we won't see that quantitative tightening twice a week anymore. We'll start to see it about once every week. Come what I think June. I think June. Let's see, maybe July. Yeah, July. So we have July 6th. And then July 13th, July 20th, and then it'll turn into like once every couple weeks or once a month. And so as we get into the summer season, again, that is our full-on bull mode. That is our full-on bull. And there's nothing that's going to really, unless there's World War III or whatever, but there's nothing else that's really going to hold it back at that point. Because quantitative tightening has ultimately been one of the major bearish effects on the bear season lately. And so, but just know, as we get closer into the spring season, the investors know that this is really right around the corner, and that's why we're seeing a recovery with the market. And so again, it's important, it's imperative that you fully understand the quantitative tightening and its schedule. That way you are aware of what's going to happen before it happens. So hopefully that makes sense. Anybody else have any questions? Want to go over anything?
Yes, I have
Sure.
a question. How do you figure stop loss on your options? Like 50-cent stop on a stock is not the same as it is on an option.
Absolutely, and I'm glad that you brought that
How do you
up. That's
figure
been
that?
something that a lot of you guys have been asking about. Now, some will utilize a stop loss, and many won't, because sometimes the stop loss can affect your trading strategies. And with my strategies, I primarily straddle, but I during the morning when I'm selling my straddles, I sell at different times depending on what the moving averages say. But Dave, you may be able to provide more insight on your method, because I think you do more stop losses. So maybe you can provide a little bit more insight on your method stop loss. Plus, there's something called trailing stop loss, which means you can always adjust your stop loss while things are moving.
Sure. Well, when it comes to options and trading in options, I don't take stop losses without seeing a chart in front of me, and I don't play options personally. I only play equities where I'm playing right off of this using my active trader off the side, where I can buy and sell inside of this. So when it comes to your options questions, I'm probably not the best person to ask, but just to give you a little understanding of what I'm looking at, if I were to look at something like this to try and trade, just a mock scenario, say I see all this resistance at this area of, well, we'll just call it a heavy resistance at $1. If this were coming up to this and I wanted to short it, if it broke through this area, I would consider it my stop loss. So anywhere you're getting in, I would consider a stop loss is where you say, this is where I'm wrong. And I use stop losses on technical patterns. So if I say I bought into this because it broke through its 200-day moving average, well, then I would want to take profits when it started to break this 10-day moving average. Take half of my profits here, and then take the last half out before it breaks back through this 200-day moving average, okay? So that's just my take on a technical analysis, and I know that isn't hitting the root of your question, but that's the best I can do for you.
But you use like the moving average, one of like the lowest one, maybe that's like your stop loss?
So I'll use the 200 for the overall understanding and market digest, like to digest the understanding of it. But I will use a moving average a lot of the times when it breaks through to show me that its momentum that it's taking off is now broken. So I do use a 10-day moving average, but this would not be the best stock to show you how I actively trade that.
Yeah. Yeah, and that's why, we usually recommend just utilizing the crossover signals. When the moving averages kind of crosses over, that's kind of like our indication when to get in and when to get out. And so, but yeah, I mean, it's a preference thing. Anybody that wants to do a stop loss, it just really depends on. But I've noticed with a lot of like pro traders, they've gotten burned by utilizing the stop loss, meaning where maybe they set one in and the price just barely touched it, and it executed the order, and all of a sudden it went back up, which would have been in their favor, but they're no longer holding their position because the stop loss had sold their position. So you just got to be really, really careful. A lot of times when pro traders have experienced that a few times, they're like, I'm done, I'm not using stop loss anymore. But it just really depends on your strategy and what you're doing. But if you're more active, you're getting in and out of positions, stop loss, is just, maybe, more inconvenient than it would be.
Also, stop losses don't need to be, there's hard stops and there's soft stops. And I like to use hard stops on things that I'm day trading in, as to where soft stops would be swing trading, meaning I set my line, I draw my line in the sand, but I'm not actually making the execution. I'm going to see how it trades in that area. If it looks like it's holding, then I might hold for another day or two just to give it a chance to breathe. So there's hard stops and there's soft stops, and either way, it depends on your time frame and your style and your personality. So.
Yeah. So hopefully that makes sense. Anybody else have any questions? Are you guys all ready?
Carlos?
Yes.
Hi. I just want to say something back to that Invite stock. Kathy Woods from that ARK investment bought some shares in it, took a stake in it like a month or two ago. So she obviously did her research with this 88% earnings beat, and who knows, maybe she knows something about their future as well. But it's just a small stock, and she's obviously a well-known investor, and maybe that has something to do with, like I said, this 88%. Maybe she saw that in her research. It could be a good stock.
Which stock are you referring to?
That Invite.
Let me see. Was that on here?
Yeah, it was about.
I believe it's Invite Corp. I believe I have the ticker pulled up right now on my screen.
Yeah, where did we see that?
It was that cancer treatment.
Oh, yeah.
Regenerative.
On the wrong page.
Yeah.
Yeah, it was just weird how all of a sudden that was just thrown in there, and it was like I don't know, it was like like I said, like I said, strange things happen for a reason, and this was like a gift from, the stock market gods, and so yeah, I mean, there's just something really interesting about this one that we just need to really look more into.
Yeah, I just thought it was interesting how that, like I said, she takes a stake in a company like that, and here you got this 88% earnings beat, and things might be looking up if this and that, so maybe she sees something for their future as well.
Yeah, because out of everything, this is the highest percentage expecting an earnings beat than any other earnings that's scheduled for this week. So that makes it very, very unusual, as well as having the highest percentage price movement out of any other earnings. I mean, this is definitely going to be one of the top ones on our radar. It's just too bad it's a penny stock, right? $2, I think. So, but to go from 30% for $2, that means it should go from $2 to $2.60 or so, as well as maybe keep going after that. But yeah, there's something going on with this, and it could potentially do a lot more, especially if it's a cancer treatment drug.
Yes. Thank you.
Yeah. Any other questions or anything anybody wanted to bring to the table, or are you guys all ready to rock and roll and ready to trade? All right, guys. Sounds like you are all ready. Everything makes sense. Any questions, you can always hit us up in our chat rooms. Both Dave and I will be available. We're pretty much available 24/7. So anytime you have any questions, please don't hesitate to let us know. Thank you guys very much.
I can't find his